Never in history has WTI oil futures gone negative. Since the dawn of man, no one has witnessed what we just saw yesterday. The futures contracts for May oil dropped over 300%
in one day.
I went to fill up gas and they paid me $30. That didn't happen, but still, guys, what is going on with oil? In this video, I'll be explaining exactly what oil is used for in the first place, the two huge reasons why oil prices dropped so hard yesterday, and how you can trade or invest in oil if your heart so desires. What's going on, guys? Welcome back to my channel. My name is Matthew and welcome to our little community of financial independence advocates. That's what I'm calling you guys now. I've dubbed it upon you. Today I have a ton of research about oil for you guys and I'm giving it all away for free. So all I ask is that you hit that like button and subscribe if you haven't already. Enough with that, let's jump right into it. First things first, what is oil used for? Easy. It's used for fuels like gasoline, diesel, and jet fuel. It's also used for heating, electricity generation, and it helps make plastics and textiles, but the majority of crude oil is used for motor vehicle and aircraft fuel. Boom, that's one off the checklist. Good job, stay with me. Next question. Why did oil prices drop? Because supply and demand is so incredibly out of whack. This pandemic means no one is driving, no one is flying, and no one needs fuel. This is a visual representation of crude oil supply and demand right now. And we don't know when that poor seesaw will level out again. Saudi Arabia, Russia, and other top producers of oil tried to prop up the prices last week by cutting their production by 9.7 million barrels a day, starting in May. But analysts forecast that oil consumption in April will fall by about 3 times that. For now, demand rests on when the economy will open back up again. The second reason why oil dropped is storage is almost full. There's nowhere to put the oil anymore. They literally have barges, big boats, just floating in the water carrying oil. But storage is not only limited, it's expensive. It costs money to hold things in warehouses or on boats. And as an oil producer, if demand is low, why would I want to hold on to something that might not be sold anytime soon? For example, say it costs me $1 for every day that I hold on to this mechanical pencil, and this pencil can be sold for $5. If I have reason to believe that no one's going to buy this pencil within the next 8 days, why would I hold on to it? Even if I sell it for $5 after 8 days, I walk away with a net loss of $3. I might as well sell it today for dirt cheap, or even pay someone $1 to take it away from me, because that way I'm actually saving at least $2. That is, in very simple terms, a way to explain what's happening with oil right now. Demand is so low and storage costs are still there, so why hold on to oil? Gee willikers, Matt, now must be a great time to buy oil. Buy low, sell high. Be fearful when others are greedy, and greedy when others are fearful. Right? While those quotes are all true, there's something I try and live by, and I love where your head is at. Let's first try and understand what we're investing in before we make a decision as to whether or not we should buy it. Because you guys have to understand, please, you must understand, you have to know what you're investing in before you make a decision. Know what you own, people. Quote of the day. As an early investor, a lot of the time, your risk comes from what you don't know. Your risk comes from not understanding where you're putting your money. I've experienced this before and I've lost a lot of money by investing in something that I didn't know enough about. But don't worry, guys, that's why I'm here. That's why you're watching this video. That's why I did 6 to 7 hours of research yesterday on the minefield that is the oil's futures market, more specifically USO. So keep watching. I'm going to tell you everything I learned right now. The moment you've all been waiting for. How do I invest in oil? How do I get some skin in the game? USO, the United States Oil Fund. Now keep in mind, this is the answer most people will give you when you ask how to invest in oil. It's not necessarily my suggestion as to how you should invest in oil, but stay tuned for that. USO attempts to track the price of oil by constantly owning oil futures contracts. Now, to understand what this means, I'm first going to explain what is an oil futures contract and how does that work. Second, how USO attempts to track those contracts, and finally, what affects the price of USO, because it's not just the price of oil. In the simplest of terms, an oil futures contract is an agreement to buy a certain amount of oil for an agreed upon price to be delivered on a certain date. Futures contracts were initially created to help tons of commodities, but we'll keep the examples to oil. For example, companies like airlines who use a ton of oil could purchase jet fuel through a futures contract. This way, American Airlines knows how many barrels of oil it's getting, at what price, and at what date, so it can plan its business strategy without having to worry about the daily fluctuations of oil prices. However, only a small portion of the futures market uses futures for this specific purpose. Traders can make money off of trading futures. This is similar to what USO does, and it's how they try and track the price of oil. If you buy an oil futures contract, you have set a price per barrel of oil in that contract. We'll call that the futures contract price, and the oil will be delivered on the expiration date of the contract. USO buys oil futures contracts for the nearest 2 months, and it hopes that by the time their contracts expire, the market price of oil, or the spot price, will be driven by high demand to a price above their futures contract's price. This would mean they can sell their contract for a higher price and walk away with a profit. USO never actually intended to buy these oil barrels. USO's method of buying and selling futures contracts is relatively risky, especially when the futures market is in the state of contango, which it is in right now. Now, I don't want to go too in depth in one video. I want to keep it digestible. So if you want to learn more about the US oil's futures market, why I personally would not invest in USO long-term given current futures market conditions, and other alternatives to USO that are less risky like USL, then click on this video right here. But a state of contango essentially means that USO's assets will slowly deteriorate every month due to futures market price action. After understanding what this meant for USO, I told the people who asked me yesterday about USO and oil, maybe now is not a great time to invest. And sure enough, today, USO dropped another 25%. This just goes to show you that you should really understand what you're investing in before you put your money there. To be concise, the biggest thing you guys have to understand is that USO does not track oil prices. It tracks the price of oil futures. So do not expect your investments in USO to track daily oil prices. And if you don't believe me, then believe CNBC. USO, if you really want to put your money there, in my opinion, is only best for short-term trades. I personally would not hold USO long-term, especially while the oil markets are in contango. Backwardation is a whole nother story. That's when, the reverse of contango happens. But I think that's too much for just one video. And again, guys, this is my personal opinion. This is not professional advice by any means. I am not a trained professional. So always do your due diligence, please. But wait, there's more. Actually, there's a plot twist. Could we see a spike in oil in the near future? Could the seesaw from the intro be completely reversed? Everyone is trying to cut production. The number of US oil rigs in operation is way down. But when things get back to normal, get this. We could see a huge spike in oil prices. These rigs, these oil producing companies, especially the smaller ones, they may have a hard time recovering from this.
I am never going to financially recover from this.
So when oil demand comes back, who's going to make enough of it? Oil production will not nearly be as high as it was before. This could be the new visual of supply and demand. So in summary, I personally will not be buying USO or any oil funds anytime soon. I'm going to wait until we get a better picture of when demand might return. As of now, the economy is kind of pricing in that we may reopen the economy relatively soon, within the next few months even. And if that does happen, we may see a spike in oil around that time. However, just because I'm not investing in oil funds doesn't mean I'm not going to try and make a play on this. Click here for some of the stocks that I might be buying during this oil crash. Anyways, guys, I hope this research was helpful. Again, always do your own research as well. If you liked this content, then please let me and the YouTube algorithm know by smashing that like button and subscribing. Why not? Get this weekly dose of me. I guess. And you know what time it is? It is time for our quote of the day, everybody. I literally said it earlier on in this video, but I'm going to say it again. Know what you own. That is from Peter Lynch. I would probably listen to him. He has made a lot of money. Thank you very much. Goodbye. See you guys in the next one. Peace.